All right, we are live. So welcome back to Dapp University. So today we got a lot to talk about in our stream. The first thing that I want to talk about today is the blockchain developer who made $31,000 in a single transaction in just one day with their trading bot. Net profit. Okay, I'm going to talk about that, how they did it, actually break this down, as a blockchain developer myself who works with this technology on a daily basis. So we're going to look at that. We're going to look at a lot of the news updates that have happened in the space. The crypto market's looking pretty green. There's a lot of positive price action across the board. I'm going to discuss some of that, answer some of your questions, and a lot more. So if you're new around here, hey, I'm Gregory, and on this channel, I turn you into a blockchain master. So if that's something that you're interested in, then smash that like button down below for the YouTube algorithm and subscribe to this channel. And if you want to learn how to master blockchain step by step, start to finish, then head on over to dappuniversity.com/bootcamp. Get started today. All right, so we got people jumping in the chat here. Let's see. We got Culture Highs, Code Chap, Oleg, Lee, Technically, Automatic Beats, Robert, Rodrigo, Just Kaz. Welcome, welcome, welcome. All right, so let's jump into this. So I want to talk about this transaction from Etherscan. I'm actually going to break this down about a developer who made $31,000 in a single day with a trading bot. So this is actually something I saw pop up towards the end of last week, but I missed my stream on Friday. We had a separate topic that we was going to cover yesterday. A lot's been going on with crypto markets. So I've tabled this particular story till today to where it made sense to kind of break this down. So let me pull up this on the screen so I can share this and you understand here. Sorry, my trackpad for my mouse is gotten kind of messed up. So I want to pull up this tweet. I'm going to go through the thread, give you the high-level bullet points, and actually break down about how this happened. So this was, like I said, towards the end of last week, but a few hours ago, an MEV bot landed a 300 ETH ARB, and the function name is literally called print money. I love it. That's one of the crazy things about making your own bots is you can call the function names whatever you want to, and then every time you call that function, it is indelibly etched into the blockchain. So we'll pull up the transaction, look at it here in a minute. But basically, they paid most of it to Ethermine for inclusion, though. That's the tick. Paid quite a hefty fee to get that transaction included into a block. So the actual profit for the searcher was about 10 ETH. So the actual bot itself, it was a 300 ETH ARB, but the actual net profit was about 10 ETH. So at the time of that transaction, it was about $31,000, just done instantly. So print money to Ethermine. That's the mining pool who include the block in the transaction. So it looks like the case of this massive ARB, the cause of this massive ARB was this transaction swapping $24 million of USDC to USDT, losing $1.5 million in slippage along the way. So one thing you have to understand is whenever arbitrage opportunities take place, it's because there's a pretty big discrepancy between different exchanges. And this was this particular transaction that caused it. Okay. And another big one. So 160 ETH profit, only 10% of that went to the miner itself. Okay. So I'm actually going to pull this up and you can see what happened here. So basically, we see a swapping of $5,243 of Ether. Sorry, no. 5,243 ETH, okay, for USDC on Uniswap version 3. And then $16 million of USDC to USDT on Uniswap version 3. And then finally, $16 million of USDT for 5,518 Ether back to Uniswap version 3. You can see all of the steps here down below. So let's talk about how this actually works, okay? Because people ask me this all the time, like, how do you create a bot that does this? So first of all, what powers the bot in the first place? So there's multiple sides to this. This is an arbitrage scenario where basically you have cryptocurrency that's selling in one place for a certain price and cryptocurrency that sells for another place another place for a different price. And what you're able to do is buy cryptocurrency in one location, this is typically an exchange, and then sell it at a different location. And there's a price difference on that. Let's say it's, $10, it's $1 per unit of cryptocurrency, it doesn't really matter. As long as there's a price discrepancy, you can afford the gas fees to actually do that. Then you can exploit that opportunity. Okay. So why does it happen in the first place? Well, one common thing that a lot of people don't understand is where do cryptocurrency prices come from? Well, they come from markets themselves, all right? It's not like pre-programmed in the cryptocurrency somewhere that this is what the price is. The markets actually set the price. So based on supply and demand economics. So that means cryptocurrency exchanges are individual markets themselves. So it's just whatever happens to be trading for on that particular trade is what the value of the cryptocurrency is. And so you have all these decentralized exchanges out there that essentially is independent markets, and they're powered by automated market makers. And so every time a trade happens, like the price is constantly changing, and those are powered by smart contracts or on the blockchain, and you constantly have the ability to monitor what's going on inside there. So you're going to see some natural arbitrage opportunities just from natural cryptocurrency price volatility. That's one of the reasons we have so many arbitrage opportunities, is because basically crypto prices are always going up and down, and whenever that happens really quickly, you just see exchanges fall out of sync. Okay, and so another reason is whenever somebody decides to make a massive trade like this with slippage, that can basically cause prices to go in a different direction like crazy. That's what I was showing here a minute ago, where basically you can see that this transaction right here is basically what caused the ARB opportunity to happen in the first place. Somebody swapped $24 million of USDC to USDT, losing $1.5 million in slippage along the way. So basically, slippage is what happens on exchanges whenever there's not enough liquidity to actually provide you a good rate for your swap. So basically, let's say you wanted to trade, $1 million for the cryptocurrency on an exchange. Well, it depends on how much liquidity is on that exchange. So if there's, $1 billion worth of liquidity death, which is absolutely insane for a DEX, then of course you're going to be able to trade, you're going to be able to dump $1 million with very little slippage along the way. But if there's not that much liquidity, you could have a massive amount of slippage. And that's exactly what happened right here. This lost $1.5 million of slippage along the way. So a high percentage. So that's what caused the arbitrage opportunity in this case. Wasn't just natural cryptocurrency price volatility. All right. And then essentially what happens is whenever that happens, you can create something where you can create a smart contract that actually plugs into each of these and buys a cryptocurrency on one exchange and sells it on another. So the cool thing about these as well, essentially, is that you can do this without using your own money. Now, you can use your own money to get more sophisticated and do more complicated arbitrage opportunities or enhanced strategies, okay, that you couldn't do without just borrowing money. But you can do it with flash loans, where you can take out money from a smart contract, borrow it, as long as you pay it in the same transaction. In many cases, you can do it for millions and millions and millions of dollars. So basically, that's what we're able to do here, is create a smart contract that does that, takes out the flash loan, exploits these opportunities, pays the money back, and then you have a profit. Now, there's a final challenge with this, which is actually making that profit, because one of the big headwinds for these types of opportunities is the idea of miner extractable value, and that's really what you're doing in the first place with these arbitrage opportunities. Is you are extracting value that exists on the blockchain. That's what an arbitrage opportunity is. If you're able to use flash loans to take it out, is basically there's just value on the blockchain, and as long as somebody can connect the puzzle pieces together, then you can essentially extract that value. Now there's different ways to handle that. You can try to use a Flashbots endpoint. You can try to basically pay, exorbitant gas fees. They're talking about bribing miners, all this type of stuff. And here it looks like we did see a pretty hefty gas fee paid by a miner to include the transaction into the block, which is why it resulted in just a 10 ETH profit. Just a 10 ETH profit, right? We're talking 31K at the time of doing this particular arbitrage. For an instant transaction, it's not too bad, right? So that's essentially how that works. Those are the strategies that actually made this successful. So that's a breakdown of how it works. And so when we're talking about actually creating something like this, what are the essential components? You need the smart contract to actually facilitate the trade. If you're going to do flash loans, you can do that. If you're talking about something that actually finds these opportunities, that's what the searcher is here that they're talking about. So basically, the searcher is what it's able to detect this massive price discrepancy that occurred whenever you have this, $1.5 million of slippage that causes these two exchanges to get wildly out of sync. Okay, so that's the other side of the equation, is you have something that facilitates the trade, smart contracts actually plugged into these exchanges, because that's the beauty of these exchanges. They're totally permissionless. They're powered by smart contracts. The ability to buy and sell cryptocurrency, you have full access to as a developer. No one can tell you can't, all right? The ability to take out flash loans, totally permissionless. No one can tell you can't, all right? But then you have the other side of the equation, which is the searcher, that's sort of sniffing out these opportunities. So basically what you need in that case, and it sniffs out the opportunities and then calls your contract. So what do you need to do that? Well, you need some sort of watcher. It can be a script. It can be some sort of process that runs continuously on a computer, maybe in the cloud. All right, we're able to monitor these prices, and you most likely need access to, well, you don't most likely, you do need access to basically a blockchain node if you need to read information from the chain, all right, and then also to be able to call your particular contract anytime that these types of opportunities arise. So basically you have the contract over here, it's programmed, and then you have the watcher that sits there and watches cryptocurrencies. So it's a watcher and it's also a caller. So it watches for opportunities. As soon as it finds an opportunity, it fires off a transaction to the contract that you created in order to do that. And so that's an overview of how this works. So this is absolutely crazy. Okay. I'm seeing more of these types of things pop up. We actually talked about one last week about the Bored Ape Yacht Club holder, or not holder, well, I guess they were a holder, who was able to use flash loans plus some of their own money to claim their ape airdrop. Okay, I don't know if everybody saw that. We did a stream about it last week, but we saw essentially, Bored Ape Yacht Club just released their own ape token. So let's see here. Let's actually check on Ape Token, see how it's doing. And they did it with an airdrop. So if you had a Bored Ape Yacht Club NFT, then you could claim the airdrop. Okay. So we saw this, where basically all you had to do was hold an ape. They didn't specify how long you had to hold an ape for. It was not like a retroactive airdrop. You just had to possess an ape to claim the airdrop. So somebody basically, was able to use their ape as collateral on, I think it was an NFTX, and actually borrow more apes, okay, instantly, and then, claim the airdrop, and then, get rid of the apes and get them back. And so they're able to use, flash loans that way. And some of their own capital as well, like I was talking about before. Flash loans aren't just a technique for doing arbitrages only, where you're putting zero money into the game. You can also use flash loans to enhance, your capabilities with your own money. You can use leverage in DeFi. You can use it to borrow assets. You can get really creative and claim some airdrop tokens for some apes you don't have. I know there's a lot of controversy around that. We talked about that in the video. Some people think it's theft. Some people think it's stealing. Let me know what you think down in the comment section below. But yeah, that's what's been going on. I've seen more and more crazy stories about this. We're seeing some arbitrage bots absolutely print insane amounts of money all over the space. So I mean, it's totally a wild time for crypto and for blockchain, because that's one of the crazy things about flash loans is, like, that's something that only exists inside of blockchain. Okay, the ability to basically plug into financial markets and buy cryptocurrency on one exchange and sell on another permissionlessly, where nobody can tell you can or can't do it. And the ability to do things like, borrow money and instantly pay it back in the same transaction and come up with like leverage DeFi strategies and all this type of stuff doesn't really exist anywhere else. And that's one of the reasons I'm so insanely optimistic about the future of blockchain technology is we keep coming up with these new novel things that, you can do here that you can't do somewhere else, because that's what the real promise of blockchain is, in my opinion, is, yeah, sure, there's a lot of opportunities to copy and paste things we already do in, traditional finance or everywhere else in the world with NFTs, whatever it is, copy and paste those things and improve them with blockchain. But the real crazy opportunities are to invent new things that don't really exist anywhere else. And that's a really good example of this, and why, we could, we're just scratching the surface, in my opinion, on what we can do with Web 3.0 in the coming years. Okay. So let me know what you all think down in the comment section below. Somebody says, can I borrow $10 million and instantly pay it back? Of course you can. Somebody says, everybody should learn programming in general, whether it's for blockchain or not, in my opinion. Somebody says the transaction won't be successful. So maybe they're asking for clarification on what I mean by that. So basically, if you're talking about transaction success, transactions have to be successful if all the instructions check out. So that's one of the reasons that flash loans exist in the first place, is you have to borrow money, pay it back in the same transaction. And so, if you don't pay it, if the money's not returned, then the transaction fails completely. That's one of the reasons that they're so powerful, is you cannot lose any of the money. There's no risk that you could borrow like $10 million and then whoops, I traded it and I didn't get it back, and so I'm on the hook for your $10 million. Like, it's impossible. It's mathematically impossible. The blockchain won't let you do that. Somebody says, so who do I borrow from where I pay it back to the contract? So you got to create your own contract to do the borrowing and paying it back. And that's really what you do as a developer. So the whole idea of, paying back in the same transaction, the blockchain, it's maybe a different way of saying that's paying back in the same block, but blocks are made up of transactions. So people think of transactions versus blocks as kind of simultaneous. They think about it in the same way. It's not really true, but that's kind of common language. So maybe we can speak to that. So, you can have multi-step transaction with blockchains. If I send cryptocurrency from my account to yours, that's just a transaction with one step. It just says, take cryptocurrency out of my account, put it in your account. But you can have cryptocurrency transactions that have multiple steps that say, like, borrow money, trade it on an exchange, trade it on that exchange, pay back. And that's multi-step. And that's exactly how flash loans and arbitrage transactions work. And that's what you do as a developer. You write smart contracts that have functions, and inside that function, it has a line for each of those instructions, okay? And so that's one of the powers of being a developer, is you're able to create complex transactions for lots of stuff beyond just flash loans and arbitrage, right? Like anything that's like programmable in the blockchain where you can do certain things. That's the superpower of being a developer, is like you're able to, manipulate the data on the blockchain. I don't say manipulate like in a bad way, like coerce and, deceive and change for bad ends. I just mean manipulate, like change information. And that's what you're able to do. And so that's how you can borrow money, pay back in the same transaction. Somebody says, should I pursue a CS degree before getting into blockchain, or just bypass it and jump straight into Solidity? It depends on what your, it depends on what your goal is. I would definitely not wait to learn blockchain if that's what you want to do. Now, I'm not saying a CS degree is going to be bad. It's not necessary to have a career, but if you want to do things that do require a CS degree, I'm not going to say don't do that. It's just you don't need it if your ultimate goal is to become a blockchain developer with Solidity. You just got to get good enough at Solidity. I don't know what your personal situation is. Like, I don't know if you have parents that are making you go to college and you have no choice, or like, if it's all on you. If you got to go to college, like computer science is not a bad thing to study. But I wouldn't wait to go through college first and then learn Solidity. I would just start Solidity now, because even if you continue on computer science, go to college, like, just go ahead and start now. Is it worth learning blockchain in 2022? Absolutely. There's no better time than 2022 to learn blockchain. Somebody says, how in future blockchain work in real estate? Definitely check out the video that I did earlier yesterday about everything will be an NFT. I talk about real estate inside of there. Somebody says, if you can't code at all, is it better to jump straight inside a blockchain? Absolutely, it is, 100%. And people get this backwards all the time. It's one of the most common questions I get, which is, should you learn some other programming language before you learn blockchain? The answer is no. You should just start with blockchain and then learn everything else as you go. You're going to hear the opposite advice all over the internet. And one of the biggest reasons for that is there's lots of reasons why, but I think one big reason is people are kind of biased into how they started in the first place, because you're going to hear that from experienced programmers, right? And basically, they're going to come from their experience of having learned blockchain as their second programming language, or maybe third or fourth or fifth, whatever it is, just not their first. And they're biased to how they learned because they think blockchain's hard. It is hard, but honestly, it's not that much harder than a bunch, the other types of programming out there if you're starting from square one, because you're not talking about like learning Rust and learning low-level languages. Like, that's not what I really teach you on this channel. I'm talking about Solidity, which is still a pretty high-level language. Like, blockchain's abstract, but you can totally start from scratch. I've helped lots of people do that. I just hired somebody personally who took that route, so it's totally possible, totally works. Just did a video with Pavan, who landed a 6-figure blockchain job without that kind of experience. Will quantum computers break the blockchain security cryptography? It's a good question. I don't think it's a threat to blockchain long term. Because at the end of the day, the answer is quantum resistant. Like, basically, like, if you have quantum computers, then you can create quantum cryptography, right? We already do have quantum computers, they're just not very sophisticated. And, well, we're talking about commercial purposes, right? But there could be people who do have quantum computers, right, who are capable, we just don't know about it. So, but the real question is, if you had the capability, to have a sophisticated quantum computer that could do everything people are scared about with quantum computers, would you really use that to like take down, Bitcoin blockchain? I don't think so. I think you got a lot bigger opportunities out there, and you're not going to show your cards to let everybody know that you have a quantum computer just to crack some crypto wallets. I think you got much bigger upside than that. So there could be a potential scary interim period where, like, more kind of like knuckleheads, have quantum computers before, quantum cryptography is implemented. There could be this like transition period, but I'm not really worried about it. Quantum computers are so far away from being a threat that I'm not worried about it. Is Solidity used for Web 3.0 gaming? Not sure how Web 3 games are made, to be honest. So it totally depends on what you're trying to create. There's lots of Web 3.0 games. NFTs are definitely going to be a huge part of that. Most NFTs are going to be built with Solidity. How much Python is useful in being a blockchain developer? Depends on what you want to do. If you want to create smart contracts and just like test them, write scripts for them, build bots, stuff like that, Python's incredibly useful. You can do most of that stuff with JavaScript as well. Just depends on what you want to do. You're gonna have a limitation of, building client-side applications, stuff like that. That's one of the reasons I focus so heavily on JavaScript. It's a little bit more versatile than Python. Now, I know people, the diehard Python fans out there, love Python. So, totally. If you want to learn Python for blockchain, it's totally a great language. It's going to be a little bit more limited than JavaScript for most people's use cases and applications. And so, if I was teaching somebody to program from scratch, most people, JavaScript's going to be a better option. But if you have let's say you have a really good reason to learn Python and go down that route, and you've already decided, and you know what that clear outcome is, then by all means do that. I would just say if you're starting from scratch, you don't know what to learn, then JavaScript's going to give you more options. What's the lowest amount I can put in my wallet to test a bot on mainnet? It depends. Depends on how big the contract is and what the gas fees are for the transactions themselves. NPM or Yarn? It's a good question. I don't think it really matters that much. Pick one. Used to be Yarn had massive advantages over NPM, and then NPM just like implemented all that stuff. And then now you have a bifurcated developer ecosystem. So, message after learning fundamentals of blockchain and Solidity, where can a normal person get employed? How do I find a job? So, easiest way to do it is definitely check out any job posting website out there that lists blockchain jobs. You can look at any of the blockchain specific job websites. CryptoJobslist.com is a good example. You just search for jobs there. And then, you can also make a list of companies you know in the space and see who's hiring. A lot of times, just because you don't see a job listed on their website doesn't mean you couldn't get hired there. It's just, are they hiring? Are they hiring developers? Then they probably could hire, somebody who's, relatively new on the grand scheme of things, even if they don't have a role open for a junior blockchain developer. Well, so, really at the end of the day, you want to make sure that you have, are checking as many opportunities as possible, because not everybody's going to take a chance on a beginner, all right? But the more places you apply, the more likelihood that you're going to, get that chance. Definitely go check out the video pinned to my YouTube homepage talking about how to become a blockchain developer in 2022. That's going to give you everything you need to know to get started. So I do want to take a quick peek at the crypto market, see what's going on here, because, we're seeing lots of green this week. And so what are my updated thoughts on this? So, we moved up pretty fast over the weekend and even into yesterday. And so, things are looking pretty good. The current battle is for this 200-day moving average. Okay, so we started to see a little bit of resistance here. We're seeing, definitely a local trend reversal in terms of this being a bottom. We're seeing our 50-day moving average, move up as the price is moving up like crazy. You can even see the 200-day moving average start to flatten out and probably also move up, assuming that we continue to climb here. But this is sort of like our current battle before, we get overly bullish about the short term, at least for especially entire crypto market. So the one thing to note here is with this 200-day moving average is it's going to go up if the price continues to go up. So, if we break above it, then I definitely want to see us kind of like stay above it and keep it as support. Okay. Because anytime that you see, this sort of raging bull market back here, right, we stayed above this 200-day moving average. And it's like, as soon as you broke it for good, like I was like, well, it was sort of our, temporary game over. Just temporary, right? We came in and put a new all-time high here, but this, I think, is what a lot of people are watching, and that's why we're going to see some resistance around this price level, about $48,000. So, if we bust up to $50,000 and then we don't drop below that level, that's going to be a quick turnaround. A lot of people are sitting here, who are bearish crypto, who are in disbelief, but that's kind of a good sign, right? Like the fact that there is some disbelief on the table is indicative of a disbelief rally, right? So same type of thing for the Ether price. So let's check on this here. Ether price, right? This line drawn in here because I was checking out the downtrend. We definitely smashed that downtrend right here. So let's take it out. And same sort of deal. Here's our 200-day moving average. Hitting that is a little bit of I wouldn't confidently call it resistance yet because, we just barely kissed it. Let's just see what happens, okay? We're definitely seeing the 50-day turnaround. Everything's pretty green. So, I talked about this some yesterday, like what's sort of my outlook on the crypto market. As always, my base case is that we're building technology that's really useful, and as you create that technology, that it generates demand, and that demand can accrue to the cryptocurrencies themselves, especially insofar as cryptocurrencies using that technology. And so that's my base case. We've been in an uptrend for quite some time now, with boom and bust along the way. I think what we saw at the beginning of the year was some natural volatility that basically got some massive price suppression from what's going on with central bank, the United States, and also monetary policy and also the international conflicts. I mean, we saw the same pattern play out across stock markets, so it's not a crypto specific problem. I think it was weighing everything down, and I think it hit crypto at a vulnerable time because crypto is pretty volatile. All right, you could call this some natural volatility towards the end of the year, and then boom. It's just like a death knell for a few months. And every time crypto does this, it gets bearish for about 3, 4, 5 months, maybe 6 months. In our current new paradigm. That's how I'm looking at it. So I think the appetite for risk is coming back. We'll have to wait and see. I mean, my base case of crypto continuing to take off in terms of adoption has not slowed down, has not changed by any stretch of the imagination. So that's where I expect things to continue to head. I don't have any short-term price predictions. I do think, Bitcoin can hit those price targets that everybody's looking at. It's just a bit of a random walk until we get there. So that's all I got for today. As always, smash that like button down below for the YouTube algorithm. Subscribe to this channel if you haven't already. That really helps these videos out, so the more we can learn about blockchain. And if you're as fascinated with this technology as I am, if you want to get your hands dirty, how can you get started today? Well, you go to my YouTube homepage. You can find my free courses there. They're like Udemy courses, but they're totally free. And if you like those and you want to take the next step, or hey, maybe you want to take a master shortcut entirely, I can check them in Blockchain Master step-by-step to finish over at dappuniversity.com/bootcamp. You have to be an expert to get started today. I've helped people with zero coding experience become real-world blockchain developers in a matter of months. So that's all I've got. And until next time, thanks for